Hey! Have you ever watched price blast through a level, flip it completely upside down, and then come back to use it as a springboard? If you have no idea what just happened there, don't worry, Dudu got you. Today, Dudu teaches you everything about what is a breaker block. By the end of this video, you will know exactly what a breaker block is, why it matters, how to spot one on your chart, and how to actually trade it like a pro. Let's go. Okay, so imagine you are playing tug of war. The buyers are on one side, the sellers are on the other side, and for a while, one team is winning. Let's say the sellers are dominating. Price is dropping. But then suddenly, the buyers grab the rope with everything they have and yank it so hard that the sellers completely lose control. Price shoots up and never looks back. Now here is the juicy part. That spot on the chart where the sellers used to be in charge. That zone is now flipping sides. It becomes a breaker block. A breaker block is basically a failed order block. Bear with me on this one. An order block is just a zone where big players, like banks and institutions, placed huge trades. When price comes back to that zone later and breaks through it instead of bouncing off it, that old zone does not just disappear. It flips its loyalty and becomes a breaker block, now working for the other team. A bearish breaker block used to be a bullish zone, but got broken to the downside. A bullish breaker block used to be a bearish zone, but got smashed to the upside. Easy peasy. Let's walk through a real example using gold, XAUSD, everyone's favorite shiny asset. Imagine gold is in a downtrend. Price drops, then pulls back up, and forms a nice little consolidation area. That's your order block, a zone where sellers loaded up their trades. Price then drops again from that zone, confirming the sellers are in control. But then, boom, a big news event hits. Buyers flood in, and price rockets straight up through that previous sell zone like it is not even there. It keeps going, makes a brand new high, then starts to pull back. Where does it pull back to? Right back to that old sell zone that just got destroyed. That zone is now your bullish breaker block. The institutions that got caught on the wrong side need to rebalance. And smart money is now looking at that same area to buy. Price touches it, respects it, and launches higher again. Honey, that's how it works. That right there is a textbook breaker block trade on gold. And it happens more than you think. So, how do you actually use this? Dudu explains. First, identify the trend. You want to trade breaker blocks that are in the direction of the bigger move. If the market is bullish overall, you are looking for bullish breaker blocks to buy. Second, find your broken order block. Look for a zone where price previously reversed, then later blew straight through it without hesitation. That aggressive break is your signal that the zone has flipped. Third, wait for price to come back and retest that flipped zone. Do not chase the move. Patience is everything here. When price pulls back into the breaker block zone, that is your entry window. Fourth, confirm with structure. Look for a small rejection candle or a shift in momentum right inside that zone before you pull the trigger. Fifth, set your stop loss just beyond the breaker block zone and aim for the next major high or low as your target. Simple, clean, powerful. Okay, Dudu's pro tips time. Tip 1. Not every broken zone becomes a valid breaker block. You want to see price leave the zone aggressively, like it got launched out of a cannon. Slow, lazy breaks. Skip those. Tip 2. Breaker blocks work best when they line up with other confluences, like a key support or resistance level, a Fibonacci retracement, or a session high or low. Stack your reasons. Tip 3. Always check the higher time frame first. A breaker block on the 15-minute chart means way more if the 1 hour or 4 hour chart is pointing in the same direction. Higher time frame confluence equals higher probability. Let's go. So there you have it. A breaker block is a failed order block that flips sides and becomes a powerful zone for the opposing team to trade from. Spot the break, wait for the retest, confirm your entry, and trade with the bigger trend. Subscribe to Dudu Trades so you never miss a lesson, because Dudu drops trading knowledge every single week just for you. See you in the next one.